Okay, welcome everybody to the first ever market update of the Bitcoin Traders Collective channel. I am really happy to be launching this video right at the moment of new all-time highs being set. That being said, my intention for this group is to help to guide you all in a rational way that is clear, based on price action, and not based on emotions. So, what we have here is a weekly chart of Bitcoin. Each of these candles represents a week of price action. The light green candles, teal, are weeks where we had upside, and the purple candles are weeks of downside. In another video, I'm going to go into just the basics of candlestick charts and how to look at them and determine the direction of a trend, but for today, that's really all that you need to know. So as you can see, we are in pretty much the middle of a parabolic move since the coronavirus crash in March. So basically, since the bottom of that crash, which was just below 4K, we have had a move of 400%, which is a 5x. If you had invested in the very bottom, if you'd invested $1,000, it would now be $5,000. That's a pretty huge move for Bitcoin in a 6-month period. As you can see, we had a move like this in 2019 that went from this 3,000 range up to almost 14K, 320%, which would be a 4.2x. So we've already surpassed that move from last year. If you go back here, you see the parabolic run of 2017 bull market, where we broke out of previous all-time high, which was around 11K, and went all the way up to 20,000, which was a 1,600% move, or a 17x if you bought the breakout. So the reason that I am showing you these key 3 parabolic moves of the last several years is so that you can understand that what goes up oftentimes must come down. So in 2017, we had this huge run, peaked at 20K, and then bam, a 3-year bear market. A bear market is when price is going down. And almost 3 years later, we have made it back up to test this region. So the reason that I want you guys to understand this is that if you've been catching the news, you're interested in Bitcoin again, there's a lot of hype right now. Yes, it could be a good time to buy it, because if we break above 20K, we're in undiscovered territory, or price discovery as they call it. However, at the same time, you need to know if you're buying in at resistance. So this previous all-time high is definitely resistance level. And it's not uncommon to have corrections even once we break out. So if you go back to 2017, early 2017 down here, you can see that once we broke above, where is it? Right here. Let me zoom in a little bit more. Okay, this is the move in 2016 to break out. So right here is when we had the breakout above the previous all-time high, which was around $1,100. Immediately after, 35% drop, more or less. So that could also happen now. So you just need to know, if you buy right now, you could be 35% in the hole. If you put in $100,000, you could be looking at your account in a couple of weeks and it is $65,000. If you understand the price action of Bitcoin and the volatility, and you believe in the fundamentals, and you're an investor and you don't need the money, this is no problem. If you don't have an understanding of those things and you see your account drop in that way, there's a chance you're going to panic sell and lose money. So you really need to understand, like, if you buy at these levels, you're holding with conviction, and you need to put in an amount that you're not going to need to touch for a while. So yeah, we broke out in 2017. We had a 35% correction, but even after that, we pushed up to almost 1,300. Bam, another 35% correction. And I remember that was a big moment when there was supposed to be maybe a Bitcoin ETF was going to launch. The SEC was looking at it, exchange traded fund, and they denied it, and the price immediately crashed. Then we had the run up to $3,000. This was the time of the scaling debate. The Bitcoin network was clogged. The question was, how are we going to scale it? Talks of hard forks, creating new Bitcoins were underway, and major drama and battles in the Bitcoin community of how to scale the network. All that being said, during that, I guess it was a couple of months, if I remember correctly, or maybe 6 weeks, another drop, almost 40%. And so, yeah, in that course of time, 35% drops. So where we are now is December 2020, and we have had this rocket ship blast off from, I would say the last correction was from 12.5 down to 9. And since then, it's been weeks and weeks and weeks and weeks of upside. So you just need to understand that it doesn't always just go up, no matter how much you believe in it. Now I'm going to put a moving average on here. This is a 20-period moving average on the weekly chart. And the reason that I'm putting this indicator up is because it has always acted as the support, the average price support during up cycles or bull markets. So again, if we scroll back here to late 2016, early 2017, you can see that price always stayed above this orange band, the 20-week moving average. And even when it corrected in these 35% drops, bam, it always bounced at the 20-week. So for people buying or wanting to get in, these were amazing times to get your position, to take a long entry, to invest as an investor or a trader. At the same time, if you bought the tops of any of these moves, you might have been pretty stressed or sweating it when you were seeing these corrections happen. So yeah, the 20-week moving average always historically has supported bull markets. And then you can see after we crashed in 2017, once we went below that 20-week, bounced, came back up, we tested it, then the 20-week moving average becomes resistance. So you can see here as we're bouncing back up, back down, it might nudge above the 20-week, but all in all, the 20-week band becomes the resistance zone in a bear market. Then we had the consolidation in 2018, around in the early 2019, around 3K. This was the best place to buy in the bear market. And you can see once we nudged above that 20-week again, we had this big move in 2019. You could call it a mini bull run. And that's pretty much the way that the 20-week moving average works. It's an incredible indicator for long-term price movements. So if you're coming in now, I would say, okay, it's not a bad thing to buy. There's a lot of institutional money coming in, PayPal, hedge funds, so on and so forth. And you probably could be successful buying this top near 20K in the long term, but just be ready if it corrects, not to panic sell, not to worry about it. Don't put in more than you can afford to sit on and watch that happening with. So if we do get a correction, levels we'd be looking at the hardest pullback we'd be looking at would be somewhere near the moving average, the 20 week, which would be right at 13K at this point. Now you should know the higher price goes, the higher this moving average slowly goes as well. So this would be an absolutely incredible entry. I am not sure if we're going to get it at this point. The volatility tends to be lower now than it was in the old days. Another level I would be looking at would be the 16K level for a pullback. And so if you zoom in to the daily chart, you'll see why. So we had this run from 14 up to 16, and we had some consolidation. And then we had the run up to 20K. So because we've moved so fast, it's really likely that we're going to need to consolidate and find some support. So the first logical support is where we had resistance here and some price action. We had a pullback here to 16K. So it's really possible that we could range for a while between 16 and 20 before we break above 20. So another entry could be the 16K level. And yeah, that's about it. I want to keep these videos short, and yeah, we're going to do them frequently, and I really hope that it helps you guys. All right, thank you.